This is a topic that I talk about a lot, both in
Mhm.
webinars and with my SCORE client. So why is this not moving? Here's
Go.
what we're going to do tonight. We're going to look at 5 common forms of business organizations. Now you're thinking, I know more than 5. Yeah, you probably do, but these are the ones, these are the most common ones. These are the ones that people in the early stages are usually thinking about. And we're going to, and I am law trained, so we're going to be looking at the law and the legal structure of these. There is a whole tax side to all of these. I'll make a glancing nod at some of those things, but um, I can't pass myself off as knowing a lot about tax. And then we're going to talk about what kinds of things you should be thinking about as you choose one over the other. So I'm not going to read this to you. I'm not going to read anything to you, I hope. But you want to spend some time thinking about this. If you never think about it, nothing horrible will happen. Well, it might. But you want to spend some time thinking about this so that what you're doing, particularly in the early going, is intentional, not that you fell into something, And no matter how hard you try, there are bound to be unforeseen circumstances that show up in the business. And you can't ever guess what those are going to be, but you want to be prepared. You want to have anticipated kind of the major ones and provided for them. And there's again, I'm not going to do tax, but there's a lot of what are the financial aspects of this form over another. So to get started, you're going to ask yourself, now I'm going to think that you're just one person at the moment. We're going to add others as we move along. Some things to talk to yourself about before you talk to maybe co-workers, co-founders. What's important to you? Now you're looking at that first one going limited liability. Well, yeah, who doesn't want limited liability? It's not the big, the big deal that it sounds like. I mean, there may be reasons where there may be times when unlimited liability isn't so horrible. Um, do you want investors? Do you want to be the one that maintains control? And do you want this business to be a legacy that you can pass on to your family, or are you thinking maybe down the road of selling it? Those are the kinds of things. Can you determine all of those today? No, you cannot, but you need to be considering them. You need to think of how many people are involved. If it's just you, okay. But if it's more than you want to have those conversations from the previous slides with those other ones. And who are those people? What are they bringing to the party? Are they people who can bring in money? Are they people who can bring in skills? Are they people who can manage and you're not that good a manager? These are really important questions. How do you want to share profits and losses? Now, if it's just you, you're not sharing, right? But if there's more than one of you, how are you going to share? Equal sounds good, but maybe it doesn't need to be equal. Maybe different people are bringing different things and don't want to share equally. And tax treatment again is a factor. Whether you are doing business in multiple states. That probably right at the very beginning, that's not going to happen, but it could. So think about it. Here are the 5 from the old tried and true ones and then the newer ones. And we're going to go through each one in that order, one at a time. And here is a chart that we're going to fill out through the night. And those 5 are across the top. And then along the side, there are various requirements or characteristics of each one. Now, please understand, that this is just a thumbnail, this chart is just a thumbnail. I'm providing more detail, and then you will, of course, be asking questions about even more detail. But I think sometimes it's kind of nice to just have a visual of this. And whenever I'm talking to a client, first meeting, who's saying, I don't know what I want to be, I bring this chart, the completed chart with me, so we can discuss each and every one of them. Some of them will simply not apply. And here's where we're going with that. I'm going to start with probably the simplest, the sole proprietorship. You've all heard of it. Many of you are already sole proprietors. You can only, because you can tell from the name, you can only have one owner. There can be other people in the business, of course. They could be your employees, they could be contractors, but you can only have one owner in a sole proprietor. If you have more than that, this is not what you've got. Yes, there's unlimited liability, but depending on what you're doing, maybe that isn't such a horrible thing, or maybe it's the kind of thing you could insure against and have insurance available. So when I'm talking about sole proprietorships, I always say, you are the business and the business is you. So it is completely flexible. It's simple. You don't have to do much. There's one tiny little thing you might have to do in some circumstances. And anything the business makes is yours, and anything the business loses is your loss. So it's flowing through. Now, here's the one little thing. Oh, I'm in Illinois. You can probably tell that from what Matt told you. But I'm in Illinois, but I know we've got people from all over. So I'm going to try not to make this Illinois centric. All of these business forms are state-based. I couldn't possibly guess where you all are, but I can give you really solid general information that would put you on the path to where you need to go in your state to do what you want to do. This assumed name certificate, which my last little bullet, is pretty universal. I don't know any state that doesn't do this. The only time you would need this is if you've come up with a good business name, a name you love, but it's not your name. And if your business name is different from your own name, you need to file a DBA. And typically you're going to file that in the county clerk's office in the county in which you're doing business. That's the same office where you file the deeds and you get your birth certificate, a copy of your birth certificate, and all those other things. My experience around here is that the people in the clerk's office are very knowledgeable, and they will help you. They will help you do this. There is a little twist. It doesn't usually cost very much. I checked a couple of counties around here, and it's not very much money. However, there is a cost when you're done. This is a throwback to another time, okay? Just so you know. There's another thing you have to do after you file with the clerk's office. And the clerk's office will tell you what and how often and how many, etc. You have to publish in a newspaper that business name is you. And it's, I don't know, 2 weeks, 3 times a week. It's all different. Check your local area. And then that's going to cost more probably than the certificate, okay, than filing. But you don't need it. Doesn't need to be, the clerk's office will help you again. It doesn't need to be the major newspaper in a major city, okay? But that's other than that, there is no like formality here, unless you need to file a DBA or an assumed name certificate. So that's the sole proprietorship. Lots of people, I've had clients come to me and say, well, I don't really have a business. And I ask them a couple of questions. It turns out they're making and selling things, hoping to make a profit. I said, you are in business. You're a sole proprietor. Oh, never thought of it that way. Yeah, you are. So here's our chart. Notice it says legal documentation, none, unless you're filing a DBA. Now, having said none, I'm thinking of some businesses where you might need to go to the health department, for example, or you might, there might be some, but just to be a sole proprietor, there's no legal documentation. Almost as simple, but not quite. And it certainly can be casual. Please don't make it casual. Is the general partnership. Now you've got a co-owner, a co-founder, if you will. And now there are two or more persons. The definition of a partnership is two or more persons carrying on as co-owners a business for profit. Notice it doesn't say we filed somewhere. Notice it doesn't say we made a 20-page document. That's it. Again, unlimited liability. It's a little scarier here than it is with the sole, because you're not only liable for your own wrongdoing, you're also liable for your partner's wrongdoing within the business. I mean, not at home. Okay. And it's all very egalitarian unless you want to do something different. Everybody has an equal right to manage. Everybody has an equal right to profits. Yay. Well, if that's not the way you want to do business, you need to sit down and work this out with your partner or partners. And of course, the more people there are, the more complicated this is going to be. And you're going to have, please, please, please have a partnership agreement. Now, if you don't have a partnership agreement, it doesn't mean you're not a partnership, as long as you meet the definition. But honestly, many times you don't want these default provisions to jump in there. That is not, you had another idea. Well, memorialize that into an agreement. I mean, there's all kinds of unfortunate, let's call them unfortunate things that can happen amongst the partners that you want to have arranged for ahead of time. It's another flow through. The partnership is not an entity. It's coming through to the profits and losses are coming through the partners. Now it's going to be equal. Well, not the, it's going to be equal unless you've provided otherwise. And again, if you've got a name for a partnership that's not the partner's names, you're going to have to file that assumed name, that DBA, in your county. All right, we are now moving into a different realm. These next three things all have limited liability, and they are all considered separate entities from their owners. Remember what I said about the sole? You are the business and the business is you? Less so here. So that's why they're grouped together in this crowd. And by the way, the only way we can get our minds around limited liability is considered not done. I mean, historically. And so the only way we can get our minds around limited liability is to create the fiction that the business is separate from the owner. Because limited liability, back to Danielle's question, limited liability means only the business is liable. There's a big exception to that I'll talk about in a minute, but only the business is liable. So the house, the car, unless it's a business, a company car, the house, the car, and the kids are safe. So that's where we're headed now, is the C corporation, the S corporation, and the limited liability company. I need to do some terminology before we start. In the corporation, that's the one that has Inc. or Limited or Corp. at the end of its name. The founding document is called the Articles of Incorporation. Some states call it the Charter, and it is filed with the state. Notice we didn't have to do any filing in the other two. That's public. I could look up the charter of any corporation in any state if I knew the name of the corporation and I knew the state. Then there are bylaws. That's that you all know bylaws. You've all belonged to organizations that have bylaws. That's the operating document. That is not public. Now, sometimes a bank will ask for your bylaws just to see who whether you need 2 signatures on a check over $5,000 or something like that. After you become a corporation, then you have a continuing obligation to file annually, an annual report, it's called. By the way, any filing with the state costs money. Surprise, right? And this is all state by state by state by state. New York does it different from Illinois, does it different from Florida. The general concepts are all the same, but how much you pay, how long it takes, all of that can change. Now, here's some funny words that don't mean what they sound like they mean. One is foreign corporation. Suzanne, was that you that you're in Pennsylvania and you're in Florida, but you got a Pennsylvania company? That's a foreign it's not a corporation in your case, but foreign corporation just means incorporated in another state. It doesn't mean from France. And then franchise tax has nothing to do with McDonald's. A franchise tax is the name we give the tax that the state imposes on corporations, either in state or out of state, for their business activities. Now, a corporation can be big or little. We'll talk about that in a minute, but there needs to be a registered agent. That's the formal name for it. And this is true no matter where you are. And that person, and it can be you, no big deal if it's you. One person can form a corporation. And if you want to be your own registered agent, knock yourself out. It's okay. But there's plenty of companies out there who will happily act as your registered agent for a fee. And or your lawyer or your accountant might agree to act as your registered agent, again, for a fee. What that means is they're going to get all the mail. Like when it's time to file your annual report, they're going to get it. If somebody's suing you, they're going to get it. It's just a name and an address, and they have to be in your state. A name and an address where stuff can get sent. The LLC doesn't have a charter, doesn't have articles of incorporation. They have articles of organization, but it is filed with the state. Now, the reason we're filing is we've got limited liability and people have to know who's behind it. And then, remember the partnership agreement? Well, the LLC that has multiple members, I cannot stress enough how important it is to have an operating agreement. And it's not public, it's just controlling the relationship of the members. Also an annual report. And don't miss out on doing this. The state will dissolve you if you don't, which is a big surprise when you go to the bank for the loan and they say you don't exist. And the LLC needs a registered agent also. So I'm going to start with the C Corporation. Oldest, been around forever, predates the country. It is a separate entity, limited liability, all the things you think you want, maybe you do. You're filing with the state. It typically is the Secretary of State's office. In Illinois, you also get your driver's license there, but it's also where you file your business. Some states have a separate office for filing business organizations. Don't quote me on this, but Delaware might, and that makes sense, right? And it's not cozy. You've got a separation between ownership and management. So here's my little chart with shareholders. They are the owners, but they're not the managers. If you own a share of Apple stock, you don't get to manage. The directors and the officers run the company. You know who's not on this chart? Who does the real work is the employees. but they don't fit into the ownership structure. And you can get real fancy here. This has got stock, as in shares of stock. And you can have common stock, preferred stock, voting stock. I mean, you can anything you want, almost anything you want. It can be tiny, it can be one person, or it can be a closely held corporation, or it can be these huge Fortune 500 companies, international companies, companies we read about, invest in, do business with. The big rap on corporations is what everybody calls double taxation. And here's what that really means. The corporation, because it's a separate entity, is a tax-paying entity. So at tax time, the corporation files a tax return, and it owes taxes if there's a plus number there, and it owes taxes. And if there's a profit, it flows through to the shareholders as dividends. You get these things, those of you who own shares of stock in some company or another, you get these things before you file your taxes about how many, what dividends you got for the year. You're going to pay taxes on that. So that's where you get the double taxation. Now, in a terribly legalistic way, it's two different taxing agent, isn't it? It's the corporation and it's you. But that if you're a single owner corporation, it doesn't feel like that. It feels like double taxation, I'm sure. So investors get unlimited liability. Unlimited liability was invented all those centuries ago to attract capital. So I am a potential investor in your corporation. I share your vision. I like what you're doing. I think it's going to be successful. I am happy to invest because I think as the company profits, I will too, but I don't want to lose my house. So the only thing an investor can lose is the amount of the investment. That's why they're willing to invest. Compare that to the partner who's on the hook for everything. So there's the corporation. You're filing. There's a lot of paperwork. P.S. You've got the charter, you've got the bylaws, you've got the share certificates. There's a lot of paper. Okay. Not impossible. People have been doing this for centuries, but just know. And here's our chart. So I'm looking at the treatment of taxable income. It's at the entity level. So the corporation pays taxes, and you pay taxes if you get anything from the corporation in the form of dividends. I said raising money is most flexible. That's because you have a couple of possibilities. You've got investors who want shares of stock, by the way, of course, who want shares of stock for their investment, which is going to dilute your ownership, but that's the price you pay for getting their money, right? You can have creditors if you're willing to pay back a loan. So there's a number of possibilities here. This isn't just for the big guys, but the real big guys are only this, C corporations, okay? Because the other ones are not for them, as you'll see. In the history of business organizations, the next thing that happened was the S corporation. Sometimes its formal name is the subchapter S corporation, after the subchapter of the tax code that it's in. This is a tax concept. You're still a corporation, but it is a tax concept. And you're going to, notice you're not going to the state anymore. You're going to apply to the IRS to be one of these. If you didn't think this had to do with taxes, think again, you're applying to the IRS. Now, time was, you don't care about the history part, but time was where you could only get to S if you were already a C. That is no longer the case. You can apply to be an S from any of the business organizations. So I had to change my slides. There they are. So what is the S and why do we care? You've got the limited liability of a corporation. Corporation means limited liability, but we're going to add flow through taxation. And what flow through taxation means is that if there's profits, they're coming through to you or the shareholders. If there's losses, they're coming through to you and they're going to reduce the other pieces of taxable income you might have. So, for example, if you file a joint return and the other person on the return is a high wage earner, you might be happy to see the losses. Now, this isn't for everyone, and you will see this is for a small fry, okay? Here are the restrictions, and you can read them. No more than 100 shareholders. They have to be people, and they are either citizens or resident aliens, no foreign shareholders. Oh, and only one class of stock. I don't know in the early going whether that matters, but there's only one class of stock. So when you apply, you swear to the IRS that you have met all of these requirements. If you're going public, if you're thinking you're going public, this isn't the way to go. Look at the number of shareholders. If you're going to make your shares available to the public, you sure as heck want more than 100 shareholders, don't you? So, but it's here. And it's less onerous paper-wise than the C corporation. And you've got the flow through taxation. It was a nod, it's Congress saying, we like business. Now, this comes after World War II, by the way. This isn't brand new by any means. Here's the new kid on the block, the LLC. Started gaining some traction in the 1980s. Now everybody's got it. It's pretty flexible. It's like you took all the best things of the other ones. So you can have as many members as you want. They don't have to be from anywhere, right? Remember that our limitation with the S corporation? You do get the limited liability, hence the name. I said normally flow through taxation because I was thinking when I added the normally about that S corporation just for tax purposes election, but normally it's flow through taxation. And you got to file with state, limited liability, right? And you're going to file articles of organization, and it's going to be typically with the Secretary of State, but check your state and make sure that's true. And once again, I make the plea, if there's more than one of you, please, please, please create an operating agreement for all those things that are going to come up, and do it early and do it away from the business. I suggest beer. And do it while everybody is still friendly and flexible. Because here's what you're going to talk about, and it is awkward as heck. You're going to talk about what happens if somebody dies. You're going to talk about what happens if somebody gets divorced. You're going to talk about what happens if somebody becomes incompetent. You're going to talk about what happens if somebody has to be tossed out of the business. You're going to talk about what happens if you need more capital because you didn't get enough at the beginning. And how you add and subtract members, and how you're going to split up the spoils of war. You can do anything, but you must provide for it. Now, just like the partnership, if you don't do this, it doesn't mean you're not an LLC. You're an LLC if you file articles of organization with the state and pay the money, period. But you want to do this. because the default positions that will come in are not the ones you want, and they don't say anything about people dying and divorcing and etc. So please don't do it for me, but do it for your family members who are going to get the short end of the stick. You are going to refile every year. That's that annual report. You're going to have a registered agent. It can be you, no problem. Now, notice this is called a limited liability company. There is no stock. There are no directors. You don't get a salary. The only salary things in here are the corporations. Now, you can take money out, of course, but it is not in the form of a salary. And those of you who have done this, either as a sole, as a consultant, 1099 consultant or something, you know about self-employment tax. You're going to be paying that. You're going to pay tax on the value of the LLC, and you're going to be paying both sides of FICA because there's no employer to pay the other side. So just know there is no salary. Yes, you can take money, no problem, but it's not salary. And you're going to file those. Here I am talking taxes, and I said I wouldn't. And you're going to file estimated taxes probably quarterly. So this is the LLC. It's kind of these days everybody's go-to at first. It's not always the best, but there's nothing wrong with it. Okay, and it's pretty easy to do actually. But I'm gonna say it one more time. I know it's getting old, but just please do that operating agreement. I shouldn't tell tales out of school. I had two score clients together who were relatives. I think they were sisters. I don't remember. And I said, you got to do this. And they said, oh, no, we can't. We couldn't do that. We're fine. No. I mean, maybe they are, but no. Here we are. I said the initial formation can be complex. Well, I'm thinking of an operating agreement. By the way, there's a million templates on the internet for these, or you can ask an attorney to put one together. But I like it. I like the LLC, but don't get it confused with a corporation, and you don't get a salary. So, which one's the best? Depends. I mean, there's some things you simply cannot be, right? If you've got more than one person, you can't be a sole proprietor. But I really urge you to do some internal reflection and discussion if there's more than one of you about management capabilities, who's got the money, all those things. It's awkward, but you got to do it. I've already discussed the fact that you sometimes can insure, that insurance will cover the scary thing called unlimited liability. Or you've got a business that's not so risky, you don't have a brick and mortar. Nobody's going to slip and fall. Nobody's going to fall on the wet floor. But some of these are easier to form than others, and if speed is required, I don't know why it would be. I was trying to think of a reason, like I got to start a business tomorrow. In order to here it goes. Don't ask me what this is, but in order to take advantage of this opportunity, I've got to form a business by the end of the week. Well, you're not going to get your stuff filed with the state that fast, even the expedited stuff. But a big point I want to make, I've made it on the last bullet. You can change. Don't panic. You can always change the business's structure. When you've gone along for a year now and you say, you know what? An LLC would have been better. Do it. Now, it costs money. but it's no big deal. You can change it, and many businesses do. So don't wrap yourself around the axle thinking you've got to get it right the first time. You'll get it right. It'll be what you needed at the time, right? And then as things happen, you may, if there is more than one of you, may I suggest weekly or monthly meetings where you sit down and kind of do the state of the business conversation? And this would be one of the topics. Are we still good as a fill in the blank? A big thing for me and lots of other SCORE members is when you're borrowing money from friends and family. I'm not saying don't. I'd love to say don't, but you don't have the luxury of that. But please put it in writing. Make sure that everybody understands there's nothing that breaks up families worse than money. So just be sure that everybody's clear on who's paying for what, when you get paid back, et cetera, et cetera. It's important. We talk at SCORE, we talk about bail, we talk about a banker and an accountant and an insurance broker and a lawyer. And Ed, I got an email from one of our colleagues the other day, and she adds another L and puts business librarian on as the other L. I love it. And of course, Ed's going to tell you, or I'm not looking at the chat, Ed, maybe you've already done it. We're here. Talk to us. I'm not the only one who knows this stuff. In fact, in our chapter, everybody knows this stuff because I keep talking to them about it. So that's what I have